Let us see what happened yesterday. After the price opened around 28,520, you can see these vertical dotted lines indicate the market opening and the market closing for the previous day. So after the price opened around 28,520, you can see that the market just tried to bounce back and test this major resistance zone of 28,560. Why this 28,560 is a major resistance? You please follow our previous presentations on Monday and Tuesday and Wednesday. You can see we have explained many times this 28,560 is again a major resistance for gold. And after taking a resistance here, the market consolidated and again the market went and tested this resistance again. You can see then market a failure to break the resistance of 28,560 caused the market to drop down, but it didn't came down below the yesterday's low. You can see the price opened from 28,520 to it is a 6 minutes candlesticks. Normally we consider the last trading price when the market is opened. So it didn't came down below this low which was created on yesterday. The market was trading within a narrow range. But the market is not trying to break this 28,560 or it is not trying to go above 28,560. Whenever the market tried to break 28,560, it is always a failure. The market couldn't sustain this zone. And again, but it is a consolidation. You can see how many times the market is hitting the bottom of 28,520, and again the market came down and closed around 28,520. When you see the total chart patterns which was formed yesterday, you can see the market is taking a clear resistance here. You can see there is enough selling in the market. There was enough selling in the gold market and the market closed around 28,520s. So when we compare yesterday's closing with the yesterday's market opening, you can say it is perfectly a neutral thing, but it was in trend with the downtrend. So yesterday market is quite, when we compare the market opening and closing, we can say it is a neutral market, but it was dominated by the sellers. Yesterday, a point should be noted is that yesterday the gold should have dropped much below this at 28,460. It was held up by Indian rupee. That is one of the major reasons the gold is trading higher. When we compare with the COMEX prices, the market should be much below this trading zone. It was trading higher just because of the pressure from Indian rupee. And today we are expecting gold to open around the same zone. So more or less near the same zone we are expecting gold to open. And today also there is no doubt we are going to expect selling in gold market that is in the downtrend. We are expecting gold to trade in downwards, having this 28,560 unless until we get a clear confirmation that the gold can move higher. We are not going to bet on buying in gold. So till 28,560 is going to act as a very major resistance because it was acting as a major resistance for past few days. We hope that today also it will act as a major resistance for gold trading, and 28,620 is again a major resistance. What we expect is that we can expect selling till 28,640. And we can have stop loss around 28,650. You can note that all the viewers can view that we have increased our stop loss on bit higher just to provide some cushion for Indian rupee pressures. So since we have increased our stop loss, the major reason for increasing our stop loss is that just to provide some cushion for trading because of the pressure from Indian rupee. Since the gold is holding on higher, we are forced to increase our stop loss on bit higher. So that is the reason we have increased our stop loss. So today also we are expecting some selling in gold, and in the evening session we have some major news like unemployment climbs around 6 o'clock. And the manufacturing index around 730. So these can very well show some clear price directions. And the target zone for gold, you may know very well if you are following us properly, 28,460 and 28,420 can be the initial target for gold for trading. So let us see what's going to happen during our trading session, and thanks for watching our videos carefully. Take care. Bye.